Why, hello there, guys. Welcome and welcome back to my YouTube channel. So today it's on a Saturday, May 23rd, 2026, and today I've just decided to do a video because I've got nothing to do today, like the markets are closed, and just to maintain the consistency, I just decided to maybe talk to you guys about a certain topic regarding uh, forex trading. So first of all, thank you for viewing my video. Please watch it because I'm going to be dropping some very serious gems today. So we've just gone past the weekend, the weekdays, so we are in the weekends. And you know, as forex traders, maybe today we are bored because you've got nothing to do, you can't trade, the charts are closed, you know. So all you've got to do during the weekends is maybe to journal our trades, backtest, and do all those boring stuff that people don't want to do. But for me, I've decided to engage with you guys so that I can be a little bit intimate in terms of videos with you guys. Maybe I don't want to skip a day without giving you a single video. Yeah. So today I'm going to tell you what I will do if I blew up my forex account today. As the title says, what would I do if I blew up my forex account today? As a forex trader, you can't go without blowing a single account in your lifetime. Like, you can't just go to profitability all the way. Maybe you don't trade, but there is no way you can go to profitability without trading. You must trade a demo account so that you can maybe go to a live account, but you must blow either of the accounts, be it a demo or a real account, so that you can get to profitability. Now you might be asking yourself, what do you have to do so that you can come back after blowing your forex, or maybe it's a commodity account, an option, you know, all those types of things that people trade. But for me, I do trade forex and maybe gold, but not golds. Gold is just maybe if I don't have a trading setup on the forex pairs. Yeah. So what would I do if I blew up my forex account? First of all, I would review what made me blow that account. What are the things that makes you blow an account? Now, before I continue, as you can see over here, I've got a chart. Like, I just opened this chart for a reason. I opened this trading view and I went to this chart for a reason. Now, what is the reason? As you can see, I took a bunch of trades during this day. Like, this is a specific time frame. Like, from this period of time, as you can see, it's around 11 a.m. around from the first time I entered into a trade, it was around 11 a.m. and then the next one around, it closed around 6 p.m. Yeah, so I took like 3 trades within a span of like 4 hours or something, and as you can see, all of them, they went to the reds. I was used as liquidity, my stop losses were hunted and all. So I have a reason why I've opened this chart, and I'm going to be using this chart over here as an example of what you should not be doing so that you avoid blowing your account. Now, what makes you blow an account? Like I've said, the first thing that I will do is review what made me blow that account. One of the things that makes you blow an account is revenge trading. Now, first of all, I took a trade over here in the morning around 11 a.m. Yeah, 11:30, around there. So I took a trade, but all in all, it went all the way to and hit my stop loss. After it hit my stop loss, I tried to convince myself that maybe I can come back to break even, or maybe at a level point I can just come and make some profit so that I can get to a level I've not made any profit or made any loss. So that is what retail traders always convince themselves, like, let us just try to get to break even. They tend to mask the word revenge trading by coming to break even, and that is one of the things that can make you blow an account. So over here, I took a trade, and then boom, my stop loss was hit, and then I decided to come to enter into another trade somewhere over here, and then again boom, my stop loss got hit. I tried to okay, let me just talk about revenge trading first of all. So I took like a trade after I blew after my stop loss was hit in another trade. So that is revenge trading, and that is one of the things that can make me blow an account. So if I would have blown this account, that would be one of the reasons that made me blow that account, which is revenge trading. Another thing is over leveraging. Now, what is over leveraging? Over leveraging, maybe you can let's say you have a small account, maybe you have a $500 account. That is a small account, and you start using a lot size of a standard lot size. Maybe you open a one lot a one lot on Euro USD, or maybe gold on a $500 account. Like, that is very, very bad, and that will make you blow that account in a minute. Or maybe you can open a lot of lot sizes. Let's say you can open a lot of positions. Let's say you are trading gold, and then you open a lot of positions on gold. So that is another thing that can make you blow that account. Over leveraging. Open a big lot size on a small account, and also opening many positions. Now that is over leveraging, and that can lead you to blowing your account. That is the second thing. Another thing is scaling up on trades that you are not sure on. Yeah, so as you can see over here, I had entered into this trade. It had came down. I had predicted that this market will go down. So when it came up over here, like somewhere over here, I just told myself that maybe this is a pullback, or maybe a retracement, so that price can go down. And I decided to enter into another trade over here, scaling up on another trade. Let's say there is a trade running, and then you enter into another trade. That is scaling up. And if you're not sure about that trade, then you'll end up losing both trades, two trades at the same time. That is scaling up on a trade that you're not sure of, and that can really lead you to blowing your account easily. So that is the third thing. First thing, revenge trading. Second thing, over leveraging. And then the third thing is scaling up on trades that you are not sure of. Yeah. The fourth thing is making very unreasonable risk to reward ratios. Someone, let's say you do not use maybe the point of interest points so that you can place your take profit or something. So you just use the digits. Let's say you always say you put your take profit, let's say on a let's say you use digits. Let's say you open a trade, and then you tell yourself, I want this trade to move to, let's say, a 1:10 risk to reward ratio. Even though you do know that it is very impossible for you to reach 1:10 risk to reward ratio in that trade. You just open it because your rule is to get a 1 or to catch a 1:10 risk to reward ratio. Yet you know it is very impossible for you to get that kind of risk to reward ratio in that trade. I'm not saying it is impossible, but some or most of the trades that you can take, the chances of you reaching that 1:10 risk to reward ratio is very or slightly low than, let's say, 1:3 or 1:5. Now you end up forcing your trade to reach that 1:10 risk to reward ratio. So what happens, maybe price might come 1:let's say 5, and then it starts reversing on you. Now that is scaling up on a now that is making very unreasonable risk to reward ratios on a trade, and that is one of the things that can make you blow that account easily. So that is the fourth thing. Another thing is closing your trades too early. Let's say you see your trade is in a winning let's say it's already in the greens, and then you start panicking, thinking that the trade is going to reverse on yourself. First of all, you need to ask yourself, if you do that, why did you do the analysis? Why did you go on and start drawing your charts in the first place? The reason you did that is to find a place that you can enter and exit. Now when we've already placed your stop loss and take profit, because you've got fear that the trade is going to reverse on you, you start closing your trades. You kill your winning. And that is one of the things that can make you blow your account, because you will be limiting your wins and making your losses gain more advantage on you. And after all, you'll end up, let's say, making the losses compound more than the profits. And that is the exact opposite of what you should be doing. You should be letting your winners run high so that it can mask, or it can, let's say, engulf the losses that you've made maybe in some 1 or 2 trades. So closing your trades is one of the things that can make you blow your account easily. Another thing is having this thing called fear of missing out. Let's say you've just entered into you've just opened your charts, and then you see like this sort of setup that you wanted to enter into, but you're not even sure, you've not even analyzed the market. You've just seen that maybe there is a flip zone or something, and the market, let's say, tends to go downwards. And then because you fear that the market will go against you, or maybe will go not against, the market will go without you, then you just enter into a trade randomly. Now you don't even care about liquidity sweeps. You've not seen maybe that is an inducement or something, and all in all, the trade ends up reversing on you, going against you, hitting your stop loss. Now that is entering into a trade because of fear of missing out. You don't want the market to move without you, and that is one of the things that can make you blow your account easily. Another thing is pushing your stop loss further from the original point. Let's say, for example, for me, if let's say I had placed my stop loss over here, and then I see this trade going up on me or reversing on me. Let's say it has reached somewhere over here. Then I start pushing my stop loss maybe to this point, or maybe up here, so that maybe I'm hoping that the trade might come over here and then hit my stop loss and then go to my way. So I end up increasing my risk, so that with the hope that maybe the trade might reverse and go to my way. And that exact act of pushing your stop loss up is limiting you from winning, because who knows, because maybe your trade idea might be wrong, and all in all, what you are doing is increasing your risk of you hitting your or maybe losing a lot of money with you increasing your stop loss, or maybe moving your stop loss further from the original point. And that is what can make you blow your account easily, because if you keep having that habit of moving your stop loss further from the original point, then most of the time, if the trade goes against you, you'll be losing a lot of money compared to if you had just let your stop loss be or remain at the exact point that you had put it originally. Maybe if you want to move your stop loss further, let's say you just want to give it some breathing room, not the fear of maybe it will hit your stop loss then go on your way. Because if you want to avoid that, just look for liquidity sweeps, because the thing that you're doing, maybe you are pushing your stop loss so that price cannot hit it and then go to your direction. Maybe you don't want to be used as liquidity. What you can do to prevent that is do more analysis, check for all inducements, and check for whether there will be any liquidity sweep in that trade, and just avoid entering into that trade until a liquidity sweep occurs. Yeah, so that is another thing that can make you blow your account easily. Another thing is greed. Now let's say you've already placed your take profit somewhere over here, and then when your trade has already reached over here, let's say you were aiming at this point and it's, let's say, at $180 in profits. Now you end up forcing the trade to reach, let's say, a $200 or something. Let's say you just want that $20 that is remaining for you to reach the 200 limit on your take profit. Now that is greed, and that greed, you don't know, maybe if you had placed your stop loss maybe on this demand zone, the trade can just reverse on you after it has hit that demand zone, and you'll end up losing your money. It can just go all the way up here and hit your stop loss. Now that is what we call greed, and that is one of the things that can make you blow your account. Another thing is jumping from one strategy to the other. Today you use the smart money concept, tomorrow you use the ICT, the next day you use the candle range theory, after that you use price action, the next day you use supply and demand, order blocks. You see, like you just end up shifting from one strategy to the other, like you be a jack of all traders but a master of none. Like you are just a juggler, you just keep juggling strategies here and there, and then you end up being a master of none. You don't practice one strategy to the fullest, and that is one of the things that can make you blow an account, because some of the strategies might be might not be accurate, because maybe you might misinterpret it because you've not mastered it, so you end up misinterpreting what the other people are doing, you see, and that might lead you to blowing your account easily. Another thing that can make you lose or blow your account is shifting from one trading guru to the other. Today you end up listening to this trading guru, the next day you shift to the other one because the other one seems not to be working, when all in all you are not the one who is working, because you end up shifting from one guru to the other, you see. So that is another thing that can make you blow your account, because today you'll be using this guru's strategy, the next day you'll be using the other guru's strategy, and that will make you lose your account easily. Now, with that being said, how the next thing after reviewing what made you blow that account, what would you do next? Of course, the next thing that you would do, because you've already known what made you lose that account, the next thing is to create something that can make you not go against the rules, or something that might go the opposite of what made you blow that account. Now that is when you come in with the solutions to what made you blow that account. Let's say, for example, the first thing, you always revenge trade. What would be the corresponding action for you not to revenge trade? You don't revenge trade. If you see you've lost one trade, then you leave it there. You just close your laptop, your monitor, your phone, or whatever you are trading, whatever you're using to trade, you just close it and you just tell yourself you live to fight for another day. The market might have won the battle today, but it has not won the war. Simple. You just don't revenge trade unless you see a setup. Maybe you have a rule, maybe you want to take 2 trades in a day, so that is what can make you maybe enter into another trade. And when it reaches that 2 trades in a day, then just keep off or stay off the market. Don't revenge trade. Wait for the next day, or maybe wait for the next day, because the market will always present opportunities to you, and maybe today might not be your lucky day or something, so just wait for the next day. Even though I believe that there is no luck in the market, you just have to work hard. You just have to work hard. There is no luck in the market. But don't revenge trade. If I blew up my account and I've already know that I do revenge trade, the first thing that I do, I would not revenge trade. Another thing, I would not over leverage. Now that is where you have to study the leveraging techniques. Let's say you are opening let's say a trade on Euro USD. You have to know how many pips you've got to place your stop loss and all, and then after that you'll have to know the type of lot size that you'll be using and how many positions you have to use, and that is when the position size calculator gets in. So I'll do a video about how to use a position size calculator. Yeah, don't over leverage, just go to use just use any position size calculator. You can use my FX book, that is what I always use. My FX book position size calculator, that is what allows you to know how many what type of lot size you should use and how many positions you should be opening, so that you can manage your trades well. Don't over leverage, because that will lead you to blowing your account. The next thing that I will do is I would not scale up on trades that I am not sure of. Let's say, for example, I wasn't sure that the trade would go downwards because I had already lost another one over here. So I would have avoided this trade because I wasn't sure that the market would go downwards. But because I was trying to maybe revenge trade, maybe to come back to break even, then I decided to scale up. And that is what made me lose this trade again. 2 trades in one session, and that is what killed me. So I would not scale up on trades that I am not sure of. Another thing, I would make reasonable risk to reward ratios. Don't go on looking for a 1:10 risk to reward ratio on a trade that only accommodates a 1:5 risk to reward ratio or 1:3. And what I would advise you guys on matters risk to reward ratio is always place your take profit on the next point of interest. Maybe it's a supply zone, or maybe it's an order block, or maybe it's a lower high or something. You see, if you use those point of interests to place your take profit, then you will be safe. You will already know that this is where the market will be going, and this is the most almost let's say most likely guaranteed point that the market will come, and that is I can gauge my risk to reward ratio using that point of interest. If you see that maybe that point of interest is a 1:2 risk to reward ratio, and you don't want 1:2, you leave that trade setup, because that will not be a high probability setup for you. So you just avoid that trade and go and look for another trade setup. You see, that is how you find a risk reward ratio. Let's say, for example, for me, I had told myself that the price might come all the way to this demand zone over here. I saw that this is a 1:3.38, and I am satisfied with that 1:3.38. Then I just enter into a trade. But if that 1:3.38 is not maybe conducive for me, I just leave that trade and I go look for another trade that will suit me. You see, so what I will do is I'll make reasonable risk to reward ratios. Yeah. Another thing, I won't push my stop loss further from its original point unless giving it a breathing room. Let's say I'd placed it on this higher high over here, and as you know, in a higher high we've got liquidity lying above this higher high. So I'd give it a breathing room, let's say to this point over here, so that whenever price sweeps liquidity above this, it would not just sweep it and go downwards to my direction, and I would not have the price would not have hit my stop loss. I would just give it a breathing room. But the point to a point where you've already given it a breathing room, and then you see price reversing on it, and then you keep increasing that lot size, not lot size, the stop loss gap, then that is where you are killing yourself, and that is what you are doing wrong. So I would not like move my stop loss further from its original point unless giving it a breathing room. Yeah. Another thing is fear of missing out. I would not have that thing of feeling of fear of missing out, FOMO. Like, you just have to do your analysis. If that trader goes without you, then you'll always find another opportunity in the market. Like, there are a lot of opportunities in the market. Maybe if price went down all the way to this point without me riding it, then I would wait for it to come to this demand zone and take that trade. That is a trade opportunity that the market has given to me. You see, so don't have that fear of missing out. Do your analysis, make sure that you're entering into the correct trade, then take the trade. If it's not a perfect setup for you, then just leave it, but don't have the fear of missing out. Then another thing, I would take greed away from me. Greed won't be a part of me. Like, if I say I'm going to take profit at this point, then that is the place that I'm leaving or taking my profits. I won't say that maybe let me just push it maybe to a $200, maybe it's at 180. I tell myself maybe just get this extra $20 or something. No, where the place that I've placed my take profit, that is where I'm taking the profits. No more, no less. Yeah, unless you are a person who uses trailing stop loss, or maybe you take partial profits. But for me, who I set and forget, wherever the place that I've placed my take profit, that is where I take the profit. No more, no less. Another thing, I would stick to one strategy. I would not be moving from one strategy to the other. I won't do today ICT, tomorrow SMC concept, that thing. I would not use indicators today, the next day I use price action, the next day I use CRT. No, I would stick to one trading style, one trading strategy. And for me, I always use this strategy called market mechanics. Again, I have to mention my indirect mentor, who is the trading geek, aka Brad Go. So he's the one who invented the market mechanics, and all credit goes to him. I use market mechanics where I use supply and demand, order blocks, and then we've got these liquidity concepts, inducements, and then we've got the market structure. Yeah, that is, I've sticked to market mechanics. I won't use price action today and then tomorrow I shift to market mechanics. I won't use indicators because I've already sticked to market mechanics. Yeah, so just stick to one strategy if you want to keep your account safe. That is my advice for you guys. Another thing, I would stick to one trading guru. If you want a trading guru who will be giving you setups or something, or maybe showing you how to trade, stick to him. Don't move from today you are in using the trading gig, tomorrow you are using Mamba FX or something. No, stick to one trading guru, because he's the, if you believe in him, you truly believe in him that his trades are the best, then, or maybe he advises you the best, or maybe he mentors you the best, or maybe he's your idol or something, just stick to him. Don't move from one trading guru to the next, because they are using different strategies to trade, and that will deeply confuse you. So just stick to one trading guru. For me, I recommend, it's not that I don't know, he doesn't even know me, but I know him. So it's not that I'm maybe, no, I'm not broadcasting him or something. But for me, I do recommend the Trading Geek, Brad Go. Just go to YouTube and search the Trading Geek, or Brad Trades, or maybe let's say Brad Unfiltered, or Brad Official. But all in all, just go and search the Trading Geek. You'll find all his links on the description. The Trading Geek, the Trading Geek. I do recommend him highly, because he's really helped me. Like this week alone, the past week, let's say from Friday till Friday to Friday, I took 6 trades, 7 trades, and I won 5 out of 2 using market mechanics. And I did whatever he told me, like whatever he was saying in his videos, and it really helped me. So I do highly recommend the Trading Geek. So guys, just go and watch him, and you'll I promise you'll really like him. Yeah. So those are the things that you those are the things that I would do if I would if I had blown my Forex account today. The next thing that I would do, and then after I've already gotten my solutions, that is when I would open a new account, because there is nothing that you can do without chips. No, you can't trade without chips. So I would open another account and then stick to my rules. Yeah. So thank you guys for watching. This has been an absolutely nice Saturday for us. So please subscribe, like, share, comment if you want more videos for if you want me to create more videos for you guys, and also give me suggestions of what you want me to be doing in the next videos. Yeah. So thank you guys, and be blessed, and always remember, you are always one trade away.